Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend, was able to spend some quality time with their family, able to get away. We're going to do what we do each and every Monday, Wednesday, Friday, taking a look at our four major markets and identifying potential breakout and reversal setups as they are showing up. So, if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. Leave a like. That means a lot. It means a really big lot. If you leave a like, throw the thumbs up icon. All right, let's get started. So the ES this morning, we're up about 24 points. I looked at this actually last night and was looking at a potential breakdown below 44.45. We came close to getting that breakdown in the overnight, but we were just unable to do so. And so on our 4-hour trend, we definitely have a little bit of weakness, but that's pretty standard for the week after the Labor Day holiday. Is that you typically get a little bit of a down week. I think that right now we've got still a breakdown possible below 44.45 with a really nice demand area here at 43.86. As the eventual target if you get basing here. Now, we'll have to get the basing. Without the basing, that doesn't really do much of anything. Looking at our levels up above us, if I look at this 15-minute level, there is a little area here where we may see a bit of a reversal, but I'd actually want to see a potential breakdown below this 44.66 if you want a day trade opportunity. And we are sitting in a little bit of a supply area right now. But we based in front of it, which means it's fairly weak. And so our next actual supply area is this area up here at 44.83, where we could see a little bit of a reversal this morning. Now, we are seeing a bit more bullishness this morning as well, and so that's certainly not boding as well for a potential setup in this one. Could still be a decent move. Let me switch this to a confirmation, actually. And I'm switching it to a confirmation because even though we're in a 4-hour downtrend, we're already up 250 points on the day in the Dow, 25 points in the S&P, and so let's just keep that in mind as well. I hate to fight against the tide when the tide's coming in on us, but I think that this could be a decent little reversal, but let's be a little bit more cautious and make it a confirmation short. Next, the NASDAQ. So in the NASDAQ, we are actually coming up to a little 15-minute area up above us. If I click on this here, everybody can see this little 15-minute former area of resistance, of support, and then old support oftentimes becomes new resistance. The downside of this level is all the basing that we're doing in front of the area. So basing in front of the area makes me less interested in this zone. It's anytime we get basing in front of a level, I need to be a little bit more cautious about what that level can do. And so looking up above, I think that this becomes our better supply area somewhere up in this region. Looking at that on a 1 hour, if we do make it back up to there, then I think we're going to be hard pressed to really see much of a turn in that level. So just I would keep a close eye on that to see what it looks like when we do come back into there for a confirmation entry. Just like the one I just removed, if we get basing in front of that level's going to be no good. Well, what about demand, right? If we're looking at demand, this little area right in here is a pretty clean wick over wick, but we based out of it. You might actually see a little trade back into here for an intraday opportunity for a long. I actually like the intraday opportunity for a long on a pullback retest better than I like the short up above. All right, crude oil. So crude oil, we had an hourly supply level. We hit it last night. 1, 2, 3, 4, 5, 6 candles later, you had gone nowhere. So ideally, you move your stop back to break even, close that position out, and then it pops back up through. Now, pop back up through, we've just put in a 4-hour kind of very sideways confirmation on our 4-hour. We were unable to make it through this potential breakdown point. And so now we've popped above these highs. Our next real target area, I think, would be this circled area up in here around 73. And that's looking at that on the 4-hour chart. But on the 1 hour, I don't really have great demand to lean on. We hit our nice little level here on Friday after a little move up, retest, and then popped away. Um, and so this is the level that I was looking at Friday morning, and we never came back to that one. So I'm going to leave that one in play. But other than that, I don't have a lot of phenomenal levels that I'm super, super excited to jump in on for the reversal trade. So I think it's better just to hold off and wait. Gold. Gold is sitting above a potential breakdown there at 1784. And if I look at this on a 4-hour chart, we can see that we are at a pretty strong support line. That support line's been tested on a number of occasions. A little bit of basing in front of that would make for a potential breakdown. So those are our 4 major markets of the day. Somebody did leave a comment recently, and they said, "Hey, where's the stock of the day been?" And so let's go back and talk about a stock of the day. And our stock of the day today that I'm going to take a look at is Caterpillar. So taking a look at Caterpillar, specifically on the daily chart. And I'm starting on the daily chart, and the reason is because this is a level that was a demand level that we had looked at a while ago. Price came in, gave us a nice little retest, and we got a little move away. Not a great one, frankly. We came back in, we got a second touch at the level and got a better move away. We got a third touch of the level and got a little move away. We're now basing in front of the level. So when we think about this area, what has happened to the number of buy orders that exist in this area? Well, we know for certain that we've eaten away at those buy orders, right? We know that there's less buy orders that now than existed upon the creation, right? The orders that were there at the creation have to have been minimized. Now, have more orders been added? Probably, because 200 is a nice, solid, round number, strong price point. But if we break below that 200, I think that we could see price fall, down into one of these lower ranges, 187, 180. I think that's a strong possibility because of the way that we would break through here. So keep an eye on this at break below 200. I think, and this thing has room to fall. Now, if I do a quick study set on here and I throw my implied volatility, for those of you that are options traders, we are seeing a little bit of a rise up in volatility in the last week or so. And so with that slight increase in volatility, we're still in the lower fifth of the range for the last year, but it's definitely not as low as it has been in the past few months, right? I mean, we're sitting at 29. Just a few weeks ago, we were at 26. The low for the year has been about 26. And so we are still a little bit off the low, still in the lower range, lower fifth. So you could buy a put. You could go straight out and buy a put because we are low enough that if prices continue to fall, we would probably see volatility continuing to rise up. So you could certainly just buy a put. And so if you buy the put on this one, probably going out to November, give yourself a little bit of time. And when we're typically buying a put, what I want to do is I want to buy either at the money or one strike out of the money. Now, why would I do that? Because it's the high point. Typically, it's going to be my high point of gamma, right? My high point of gamma is going to come at that level where I'm one strike out of the money. Now, I would prefer a delta of around 0.47. That's typically where I'm going to see the best bang for my buck. My delta here is a little on the low side. So we're probably going to be better off looking at the 210. If you're going to buy the put, looking at the 210 option, which is currently trading at $13 a share. If that's trading at $13 a share and that thing moves down to 200, down to 180. Oops, I guess I should hit buy. That thing moves down to about 180, then that put would be worth around, it looks like $1,700. on one contract. And where would my stop be? Well, my stop would have to be at the absolute tightest above about 210. And so let me put this, let's do this let's give ourselves 30 days, which is a fairly lengthy setup, but about 30 days out, your risk is about $486 against a profit of about $1,760 at 30 days out. And that's on the green line that we're looking at. Certainly, if it hits your stop before that, you lose less. And if it hits your target before that, you make more because we're in a negative volatility position. But that would be a pretty fair setup, looking for price to make it down to about this 180. It may not make it all the way to exactly 180. You might want to do something more like 181, 182, which still gets you about a 4-to-1 reward to risk on that position. If that's a bit too rich for your blood and you're not a fan of that, then go ahead and take a look at doing the 210 by 190 bear put spread. So the 210 by 190 bear put spread cuts your maximum exposure down to $8.30 a share. And if it hits your stop, your risk in this case is about $189. So it cuts your risk in half, and your profit is about $859. Now, the difference in this one is because it's a spread, the time decay actually helps you when it starts going your direction. You're actually better off if it takes a little bit longer. So if you think it's going to move there a bit slower, this setup actually might make more sense. Now, with the spread, you're going to pay a bit more in commissions, but you still get about that 4-to-1 reward to risk ratio if it does hit your target. So either one are good trades. You're going to pay a bit more commissions in the spread than you would in the individual just going long the put. But I think both of them set up for pretty good little trades. So if you have any questions, as always, send us an email, support@tradersarmy.com. Hope you guys have a great day. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.